Stocks on Wall Street slumped today amid more signs the U.S. economy's growth is slowing down. The slowdown comes one day after the Federal Reserve set the stage for the first interest rate cut in 4 years. However, the data also raises concerns the U.S. economy could buckle under the weight of the high interest rates. Right now, the interest rate is around 5.5%, a 23-year high. This often leads to higher payments for mortgages as well as credit cards. And for analysis, we turn now to Patrick Horan, Macro-Economist and Research Fellow at George Mason University's Mercatus Center. Patrick, good to be with you today. We appreciate it. So what are the chances that the Fed will cut rates in September? And tell us what that means for Americans.
Well, thanks so much for having me. So as you said, the Fed kept its target interest rate the same this past week, but people are expecting the first rate's going to come in September. Markets are pricing in like around a 70% chance. Now that will be contingent on data that will emerge between now and then. But right now, it seems like it's a pretty good guess that there'll be an interest rate cut then. And so, what does that mean for families? What does it mean for the broader economy? That it would be a little bit cheaper to borrow then. So if you're looking to purchase a house, then that's good news for you. It would also likely, though, interest rates on savings would go down, so you'd get less of a savings account. But right now, we're seeing inflation is still above the Fed's 2% inflation target, but it's been trending downward. And along with that, unemployment has still been very low, but it's ticked up a little bit in the past few months. The Fed's trying to balance these goals. That's why they see an interest rate cut in September as a good way to go.
Yeah, with interest rates keeping kind of level right now, talk to us about that and how does that affect things like purchasing a house for people?
Right, so the Fed's decisions when it comes to what it's setting its target interest rate affects interest rates throughout the economy, including it has an effect on mortgage rates. It's not the only thing affecting mortgage rates. So yeah, so how it sets its policy rate could make a house more expensive or less expensive. That's particularly true in the short term. However, in the medium to long term, though, really it's the supply of housing that's really a big deal, especially in this country. There's a relative lack of housing supply in a lot of in areas, particularly like the big cities where people want to live. If policymakers want to make housing more affordable, what would really behoove them to do is to make it easier to build housing, whether it's apartments or family-oriented houses like row houses, make it easier to build more homes for people.
Yeah, and we know inflation is something that's hurting so many people in so many different ways. Talk to us about that and why it is so important to bring that down, and especially as we look towards an election that's coming up in just a few months.
Right. So as I said, the Federal Reserve's goal is to have inflation be around 2% as measured by something that's called the Personal Consumption Expenditures Price Index. And again, it's still above that. As of last month, it was 2.5%, but it's been trending down. And there's reason to believe that in the last few months, the month-to-month rate has been looking pretty good. So the Fed is reasonably confident it's going to continue to cool, because inflation means that it's not just the prices of certain goods, it's the average price level rising. So when you have inflation that gets high, especially above target, it's very painful, especially for those on fixed income or those with lower income.
Patrick, before we wrap up, what's your prediction for the economy going forward towards the end of the year? Do you think things are going to get better, or should we kind of buckle down and wait for this to blow over?
Well, I like to be an optimist. I think it's reasonable to think that inflation is going to continue to cool. Again, unemployment has ticked up a little bit, and that's why the Fed has kind of hinted they're going to do an interest rate cut probably in September. A lot of people are thinking they might do one or two more before the end of the year. So yeah, it really depends, because some people were worried that inflation, as bad as it was, it's in the rearview mirror now, and a problem we may see going forward is rising unemployment, so the Fed needs to get ahead of that. So it's difficult to balance these two goals. That's why you don't want inflation to get out of control in the first place. The Fed had to raise interest rates a lot to bring inflation back down, and now there's a concern that it might overdo it, and that might create higher unemployment. But we'll see.
We will see. Thank you so much for weighing in. We appreciate your insights.
Thank you.